AML Audit Step 1 Risk Assessment. Understanding an organization's risk exposure to money laundering activities is a critical step in conducting an effective anti-money laundering (AML) audit. It involves assessing various aspects of the organization's operations to identify vulnerabilities and potential risks related to money laundering and terrorist financing. Here are some key factors to consider during this process. 1. Nature of business. Examine the organization's primary business activities. Some industries, such as banking, financial services, and casinos, are inherently at higher risk due to the nature of their transactions and the potential for large cash flows. 2. Geographical reach. Consider the countries or regions where the organization operates. Locations with weak AML regulations or high levels of corruption may increase the risk of money laundering. 3. Customer base. Analyze the types of customers the organization deals with and their risk profiles. High-risk customers may include politically exposed persons, PEPs, individuals from high-risk jurisdictions, and those with complex ownership structures. 4. Product and service offerings. Evaluate the products and services offered by the organization. Certain products, like prepaid cards or remote payment services, may be more susceptible to abuse by money launderers. 5. Transaction volumes and patterns. Analyze transaction volumes and patterns to identify any unusual or suspicious activities. Large and frequent cash transactions, as well as rapid movement of funds through multiple accounts, may raise red flags. 6. Customer due diligence, CDD, and enhanced due diligence, ED. Review the effectiveness of the organization's CDD and ED processes in identifying and verifying customer identities and assessing the risks they pose. 7. Use of third-party relationships. Assess the organization's relationships with third-party entities, such as correspondent banks or agents, and ensure that adequate due diligence is performed on these partners. 8. Employee and management awareness. Evaluate the level of awareness and training provided to employees and management regarding AML risks and procedures. 9. Internal controls. Examine the organization's internal controls designed to prevent and detect money laundering activities, including transaction monitoring systems and reporting mechanisms. 10. Historical compliance data. Analyze past AML compliance data, including any previous suspicious activity reports, SARs, filed or regulatory actions taken, to identify trends or recurring issues. By thoroughly understanding the organization's risk exposure to money laundering activities, auditors can tailor their AML audit procedures to focus on high-risk areas and recommend appropriate enhancements to the organization's AML program. This proactive approach is essential for preventing financial crime, protecting the organization's reputation, and ensuring compliance with AML regulations. For AML Audit, you can post your query at info@saauditors.com.